Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 9th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, high-level overview. Wave 1 is done. Working on a wave 2 down. Are we ready to go breaking out? Or do we just kind of chop in this zone, break down lower? Then we reverse. Just remember, wave 2 will end. Whether we get the deeper retracement, 4 years ago we talked about going to this deeper retracement, or we get a more shallower retracement. But hey, when wave 2 is over, wave 2 is done, somewhere between where we are and where we originally talked about, I do expect this to reverse and go breaking out. And once the dollar index breaks out, it's supposed to go on a nice run over the next few years toward that 130, 140 target. So let's jump into the charting platform and see, are we ready to break out, or we still need some more downside? I'm still not convinced that this is the breakout just yet. We got some price, in this case, has to prove its intentions before we know it's going to break out. But at this point, it's kind of ambiguous. Still think we probably need a lower low. Over the last year, we've been chopping in this zone, not making much headway, slight lower lows, slight higher high. So what are we going to do? Eventually this ends and we do go breaking out, but we certainly could go lower before we do. Fair enough? All right, jumping into the charting platform, we can see we're still stuck in this zone. We have this bigger resistance, bigger support, smaller resistance, smaller support, and we've been compressing and compacting the channels, as we like to call it, because we do have lower highs and we do have higher lows, and we're just kind of stuck in that zone until price proves otherwise. At this point, this looks kind of three-wave-ish. Was this a 1, 2, 3, 4, 5 coming down? And was this a three-wave correction? This is why it's ambiguous. If that is the case, that would suggest lower low. All right, if we got a low 1, 2, 3, 4, 5, and we didn't overlap, we went right to the zone that's acceptable. And if that is the case, and then this is now a 1, 2, 3, then that would suggest we need to go lower low than this guy, and push down further. But again, it is somewhat ambiguous because from the prior low, which is the current low of this point, we did get a nice move up. We got a 618 retracement, and then we bounced. But is this bounce three waves, or is this the beginning of a further push? What could be transpiring if you're a bull is that we may need to come back and retest where we broke out from. We kind of grinded up to this zone right around this 618 retracement area, and we kind of hit the fence, stop, tried again, stop, tried, stop, tried, stop, tried, stop, actually pushed lower, tried one more time, couldn't do it, went lower, then we finally broke above, tested, and we finally broke out. So this is that little zone. So is it possible we just need to come back and retest that to bounce and continue higher? We got a couple of things that are going, well, it doesn't look like we're ready to break out. We want to go lower low. And then we got some things that says, well, based on this, we probably will go a little bit higher toward our target zone. And let's review them. From this recent high to this recent low, we did take that 618 out on that big green candle on Friday. So closing above the 618 suggests we have a 75% chance we're going to go visit 101. About a 70%, 75% 101, 70+%, maybe 101.50. That's right in our zone up here. That's from this high to that low. That green candle, this is a daily chart. So that green candle right here, my friends, kind of suggests we're probably going to run up here. That's on the high to low scenario. Well, what if this is that 1, 2, 3, 4, 5, and this is the 1, 2, 3 correction? Then that suggests we're going to go lower low. So we got a pro based on the high to low. We hit the 618 zone, closed above it, kind of suggesting we got a better chance we're going to go higher. Then on the way the wave count looks, suggests we're going to go lower. We're still stuck between resistance and support. So this is why it's a little coin flip at the moment. It's tough sledding with this, and we kind of said this weeks back that we're probably just going to continue this chop sideways, even though it looks like you want to break out and it doesn't hold. It looks like you want to break down, it doesn't do it. And we're still right dab in the middle where we've been. Yes, we moved up a little bit the last few days, especially on Friday with the market sell-off. The dollar kind of popped, but this is not holding today. So maybe we need to retest the breakout. Like I was saying, come down to maybe another 1/4 point to 1/2 point, go back and retest at 99.50, so about another 1/4 point or so, and then bounce off of that to go higher. So either way, if I'm trading the dollar long or I'm trying to trade it short, you need to be aggressively taking profits. So basically on the pound dollar and the euro dollar bounce, which is spot on, they're bouncing because looking at our charts, they are showing the reversal on the software. They're showing a bit of a reversal on that 4-hour. So here on the dollar index, my daily made it overbought, starting to turn over. The 4-hour is reversing and starting to push lower, which is expected when the multiple time frames line up. You expect that you're going to see something like that. And sure enough, that's what we're seeing. So is this going to go lower and bounce, or are we going to start to break down, suggesting which one of these is going to win that battle? 4 hours kind of pushing lower at the moment. PAI, trend momentum cross, a little slope, a little angle separation. And is that the move? Or do we continue to break down further? We shall see. That's why I expect a lot more chopping. And maybe we just need to come back to that area which we kind of tested for multiple days, get a little retest to bounce off of it. That was very close to that retest right there. Maybe we go a little lower, still pushing down a bit. So it doesn't clearly state, are we breaking out or are we breaking up? That's why you need to be taking aggressive profits. Fair enough? So one says high, low, broke to 618. We're likely going to visit 101, maybe 101.50. The other says, well, if this was 5 down and this is 3-wave correction, yes, we did get to the 618.786 zone, but if we're not holding it and we start breaking back down, then the likelihood we're going to go lower low. So a key area, new support, not that we don't have enough of them on here. We got this one, we got this one. Now we're going to have this little cluster zone that we kind of rallied to and tested and chopped in that zone. And we went up, now we're pulling back. So if this area holds as support, we're likely going to go visit these. If we get below the magic fibbo, this is critical, the magic fibbo. If we get below the magic fibbo, then the probability we go lower low becomes very high probability. So where is the line in the sand? Use the magic fibbo. That's why it's magical. It's magically delicious, just like Lucky Charms cereal, magically delicious. So if we break down and can hold the magic fibbo, like first off, hold that prior breakout zone, come down here, bounce to go higher. We break below that, we get below this magic fibbo, which is this orange line. We get below that, kind of states we're going lower low. Fair enough? So watch this in the interim. If you're trading either way, well, how do I trade the dollar in? You can use UUP. If the dollar index is going up, there's ways to trade it. Or if the dollar is expected to go down, I like to trade Forex. So I trade like the euro dollar long, the pound dollar long. When the dollar is weak, those pairs go up. When the dollar is strong, just like we had that big strong candle on Friday, what did the pound dollar and euro dollar Forex pairs do? They went down. Inverse relationship. So there's many ways to trade this, but no matter how you're doing it, be careful because this is ambiguous at best. You know, I like wave counts. I like the technical picture. And the fact that we haven't broken out yet still kind of says if that's 5 down and this is 3 correction, 1, 2, 3, 4, 5, and this is A, B, C, then this would suggest we're going to break down to a lower low. But through our Fibonacci strategy and magic fibbo, we're above the magic fibbo right now. That's bullish. And we recently got the high to low. Friday's close right there is above that 618. That suggests we're going to go up to 101 / maybe 101.50. So we're torn. Which one's it going to be? As long as we stay above this support level in the magic fibbo. So this is what I was trying to say, that we're going to add yet another support zone. That's that breakout zone in the magic fibbo. So do we have enough of these on the chart, Ian? Is it making even more confusing? More support? We're building higher levels of support. And we started to break some resistance initially. Well, trying to here. We're back in the middle of the smaller one. And we're still within the bigger one. But if this area holds, then we're definitely going to go up here. If this area doesn't hold, we're definitely going to go lower low. So it's pretty, at this juncture, a coin toss. But once price finally proves itself, this is your targets to the upside. This is your target to the downside. And while we're stuck in between these two, where we're at resistance here to support there, just be careful. Maybe not even trade it. Just let price finally prove its intentions, confirm its designation, and then we're going to go accordingly. If it breaks below the magic fibbo, we're looking to go lower low. If we break above this prior high, we're going to 101, 101.50, maybe even push toward that short of 102, the short squeeze. Some people say, well, what do you mean by short squeeze at 102? What is that? Last year, the biggest trade was to short the dollar. Anything but the dollar, my friends, anything but the dollar. Short it. So there's a lot of money pushing the dollar to the downside, thinking there's a lot of debt, there's this, there's that, AI, blah, blah, blah. We got all this stuff going and short the dollar. So if that is the case, if we can get a pop above 102, so write that on your charts, this 102 level, which is sitting up right about there, 102, we get above that, then I think we can hit a short squeeze and it's going to pop about 3 points, pushing that 104.60, 104.80, basically 105, maybe even as high as 107, and give a bigger retest. From that high to this low, what would happen if we hit the short squeeze at 102? It's going to push us right to that 618786 zone. Highest of highest probability, we get a daily candle body close above 102, short squeeze kicks in, and we go popping that 105 to 107 zone. Nice little high probability trade. So what's the way to trade that? Well, UUP, that's a leveraged dollar index. If we pop from 102 up to 105, 107, nice several point pop, and on UUP, little leverage, 2x leverage, that's going to push you up, nice little bounce. Or if we know we're going to go from 102 and push 105 to 107, then that euro dollar is going to go down somewhere around that 300 plus pip range. Pound dollar should go down about that 300 plus pip range. And 300 pips is 300 pips. I like it. Highest probability, dollar close above 102, we're going to pop up this direction. And then the pound dollar, euro dollar are going to drop respectively 300 plus points. Could be 400 or 500. We shall see depending on how much it pushes. The short squeeze pushes up. Now, this doesn't mean just because we get to this initial zone, well, Gary, you just said a minute ago, high, low, this close on Friday suggests we can go to 101, maybe 101.50. That's not closing above 102. We're going to get a close above 102. We get it. Definitely, in my humble opinion, we're going to go to 105, 107. Got it? Otherwise, what are we stuck in? And you're looking at this chart going, I can't see much. There's nothing but lines and boxes and colors and just everything. Well, zooming in, it's the same thing. Is this that 5-wave down, 3-wave correction, and we're going to fail up here to go lower? Or we're going to continue to break out and go to that 101, 101.50, part of the target zone. We haven't cleared the hurdle because why are we interested in that? This 150 area, we've been kind of stuck other than that one little quick pop to 102. That's why 102 is kind of a short squeeze. We popped to 102, short squeeze continued lower, and then we've been going lower and lower. Is this the break above that? That's why if we get above that 102, says we're likely going to push into that 104 to 107 lane up here, which you can see it over here, 104 to 107. We definitely think we're going to go higher if we get above 102. But in the interim, since that last touch of 102 and we went lower, we haven't been successfully able to break above this 100.5, right? So we're about less than a point to get to that level, but that's en route to 101, 101.50. And this is why this pink box goes up to that level. We've tried that before. We've tried it. We've tried it right there, that big wick. We even tried it back over here. We could not break that 101, 100.5. So this is no easy sledding. Well, Gary, what if this kind of holds and we go just a little bit higher? That's going to be tough to break. It's tried it multiple times. This is on a weekly chart. It's been a few weeks over here back in November of last year, going into latter part of November and the end of November. We spent several weeks trying to break that level. Nope, couldn't do it. Maybe we can. Nope, couldn't do it. Well, one more time. Can we do it? And failed. So there's no easy way to say that. Well, if we get up and we reach this toward this target, it's a done deal because we're breaking out. No, we still got to get above that prior resistance zone. And that's why that pink box is up there, because we've tested it multiple times, and every time we've gotten up there, we failed. Is this one going to be different? Maybe. That's why I'm saying take aggressive profits. Fair enough? So what if we don't hold the support zone coming back down? That's going to mean we go lower low. So if we continue to break down and we don't hold the prior breakout here, and we go down into the zone, the support zone, ultimate bottom line is if this falters and we close below the magic fibbo, basically see that little swing point right there? That was the initial move up. If that is a ABC correction and we still need more lower low, The writing's on the wall when you break that swing point. So this would say we get below the magic fib, the writing's on the wall, and we're going to go lower low. Amen? Well, what's a way we get a better decision on, are we going to break through this to go lower low? Well, you can use the 2-point tool, this guy right there, 2-point tool, called the Fibbo retracement. 3-point tool is the trend-based Fibbo extension. I use both, but the Fibbo retracement from this recent low up to this recent high, you can see the zone is right where my box is, no pun intended, and obviously you can see why. It's the prior breakout zone is the 618 zone up here. Then you get down a little bit deeper than the 786, which is right here. You get the magic Fibbo. But if we start breaking below this zone in the magic Fibbo, it's over, because this move up is negated by a break below the magic Fibbo, sets the tone we're going lower low. Everybody good so far? And if not, maybe we come back, retest that to go higher high. But that doesn't mean just because we go higher high, hey, this is the breakout. This could be a test of the support zone, and this ended up being much more long, drawn out A, B, C correction. And what was the prior downtrend going into this bigger correction? Down. You continue to do pros and cons. Well, what's some more cons about breaking out? What's more pros about breaking down? Go out to a weekly chart. Go back to the COVID low, up to the high, which the 114 and change, right? From this low to that high, we took out the 618 long time ago. We were way down in here. You can't see with all these lines, but we were chopping up in the zone with the low in the 95. We almost broke this 9460 area, which is a 786. But what is the rule? You get a low, you get a high, you get a close below the 618, a candle body, not just like a little wick down in here in reverse. Well, we got weekly candle bodies that closed in here. We got a monthly candle body because we've been trugging down in this lower quadrant for weeks and weeks and weeks and weeks, even months. So this part of the pro going lower low is the fact that this low to that high, we long since took the 618 out. So that suggests we have a 75% chance we need to go visit 85.50. We have about a 70% chance we need to go visit 82. Well, where's 85 and 82? It's right at our original discussion of where we were supposed to go on that higher time frame, and that was for us to go over on this big chart our deeper retracement over here. We were always expecting from that low back in 2008, right around end of 2008, we ripped up to our target of 115. We talked about going to 115, 120. About 4 years ago, we talked about this wave 2 correction. It was going to take years to unfold, and we were looking for a deeper retracement similar to a 618, 786 zone. So we expected that this guy would come typically deeper, but somewhere in the 618, 786 zone. That's typically what we expected 4 years ago when I talked about, hey, we can short the dollar here. We can buy the euro dollar, go long. We can buy the pound dollar, go long, because this dollar is expected to correct, and it's going to take years. You'll make thousands of pips on the Forex side, and you'll go down multiple points on the dollar scale. And we expected a 618, 786 type of retracement. Well, based on that COVID low up to the high, we still suggest we're going to go visit that 85, 82 zone I showed you a moment ago, and that's right dab in the middle of that 618, 786, right? So back to the charting platform, and we can see that That gives us the 1448, 85.50, the 1272, 82.25. So this is that 618786 zone. See that green line? There's your 87. There's your 80 on the bigger scale. I just showed you on that other chart. So this is where we originally talked about going. And this suggests that based on this price action, we're going to go down here. So this is a big pro for lower low. If you're looking at if you're a bear for the dollar and believe, yep, dollar short, still going to go lower, and things aren't so well, we got too much credit card debt, blah, 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 all these things. The government spends way too much money, 37 trillion in debt, and it continues to climb. We got all this going on. We're going lower low. Well, this technical picture of this low to that high, a break below that 618, 75% chance we go visit this is still viable. Got it? So we got some pros, we got some cons. So what are we learning? You got to be aggressively taking profits in this environment. I would not be shocked to see this thing kind of falter and come back and retest a high. But if we just kind of keep going down over the next few days and we can hold this support zone, easy way to say it, we break below and close below that magic fibbo. That's where that swing point is. That suggests this is a three-wave correction, and that once we break below that pivot right there, which magic fibbo is the pivot, we're going lower low. So this would be extremely high probability outcome, and it fits that bigger degree COVID low up to the high, breaking below the 618, suggesting we're going to go visit lower lows and push away lower, all the way down to the 85 to 82 zone, which we originally talked about. But at some point, the same rule is also true that a wave 2 is going to end and we are going to go breaking out. Where are we going to go breaking out to? Go to the weekly chart. The breakout zone, once we clear the hurdle of this level, it's over and we're going to the moon, Alice, to the moon. And where's the moon? Let me go to a monthly chart. It's way up here. It's up here around that 130, 140. So those of you like long-term projections, all roads lead to 130, 140. Whether we go lower low first and kind of tap down into where we think we're probably going to go to get up there, or this is already the low and we're starting to slowly but surely break out. Once we get above this resistance zone, it's over and we're going 130, 140. So again, all roads lead to this. But the question is right now, are we ready to go breaking out? Or because of that COVID low over here, do we need to go and reach these extensions first, then reverse and go up? So which one's it going to be? It's still a coin toss. Whether we do this first, my humble opinion, we're definitely going up there. Whether this is the low, and we're just chopping and eventually going to break above this resistance zone to set the tone we're going up there. Or we get a slight lower low, not quite that far, but we still get the lower low and we're reverse. All roads lead to this. That's why on that other chart, I showed you wave 1, wave 2. This is what's unfolding. Whether we end here to go breaking out, or we push toward that 618786, which is around the 85-82 zone. We go deeper. It still suggests at some point, what? Wave 2 ends and we go breaking out. Where the breakout to? 130, 140. So it is a massive run. Question is this over? Or do we still need to go lower low? That's why I keep telling you, I'm not convinced that this is definitely the lower low, but I'm 1,000% confident on a 100% scale, wave 2 will end somewhere between here and here, or somewhere in between, and we eventually go breaking out to what? New highs, pushing 130, 140. So in closing on the dollar index, you always ask, well, Gary, you spend a lot of time on the dollar index every day in class. Well, if I know where the dollar index is going, I have a high affinity for where a lot of other asset classes are going. Least of which, because it's directly proportionate inverse relationship, is the euro dollar. Directly proportionate is the euro dollar. So the daily, getting a nice little bounce off it. You see the daily, last couple of days, we got a nice little bounce. We had a deep retracement on this euro from that low to that high, kind of tested that 618, bounced off of that, went a little bit lower, still holding the zone. So here's your 618,786 zone. This is still saying we hold this and we break out, we get above the magic Fibbo, then we're going to break out to new highs. Start targeting 118.90, 119.30, several hundred pips to get up there. Is this going to hold? Dollar breaks down, no question this is going to break out. So it's proportionate. The dollar is above the magic Fibbo, the euro's below. Inverse relationship, remember? So if the euro breaks above that, it's over, we're going higher high. Just like I showed you with the dollar. If the dollar breaks below the magic Fibbo, it sets the tone, the dollar's going lower low. Well, if we break above, below that magic Fibbo on the dollar, we're going to break above the magic Fibbo on the euro, inverse relationship, and that sets we're going higher high. As the dollar would set, we go lower low. Got it? And if that's not enough to convince you, check this out. Go out to the weekly chart, do the same thing we did for the COVID low on the dollar index. We do the same zone over here for the euro. And from this high to that low, this is part of the reversal. 4 years ago, I talked about, hey, no buy, sell to hold recommendations. I'm not a certified financial planner. I don't even play one on TV. But I said that not a bad idea to go long. That's what I'm going to do, because I expect the dollar is going to bounce over the next several years and make thousands of pips. Spot on, baby. We're there. Still doing it. Well, look at this. From that high, Emil, down to this low, we took the 618, that 112.80, took that out way over here back in early 25. That said we're going to 127.50, 75%. And that says 70% we're going to make a run toward that 130, 131. That's still viable. But what did the euro go on and do to make it even more appealing? We actually broke above that 786. We broke above that 117.50. That's my 786 zone. So what does it mean when you break above the 618? 75% chance you go to the 1448, and 70+% of the chance you go to the 1272. Well, Gary, I know about Fibonacci's, and 1.1448 is not a Fibonacci level. What is that? It is 90% of the 1.272, which is a Fibonacci level. It is a magical 90% of this. From back testing and study and history, I always take profits around that 1448. A lot of times prices will reach that and fail and not quite reach the 1272. Other times it go to 1272 and go, and other times it blast off and goes to 1618. I use these all the time, but this formula works like a heat-seeking missile. 75% of the time you close above a 618 retracement, you get a 75% run toward the 1448 and a 70+% run toward the 1272. So not only did we say we were going to go up here, but later we took out 1750. How do I know? Because we were up here at 121 and change, right? Can't see it with all my lines, but I can assure you we got up here. So we not only broke the 618 to confirm we're going there, we reconfirmed by breaking the 786 zone and reconfirm we're going up here. So you can't just ignore that. Well, we got a 75% chance we're going to 127.50. We got a 70% chance we're going to 130, 131. So that's high probability in my book. and it confirmed both of them. Not only was it confirmed breaking above 1280 here, but we then went on to break 1750, which reconfirmed the fact. So yeah, eventually we are going to go lower low. The dollar goes breaking to 131.40. Guess where the euro goes? 0.8, 0.7. So just like I did for the dollar, I am 1,000% confident on a 100% scale, we're going to go and make a new low below that 0.95. That is definitely on the card. Only question, Emil, do we get up to this target first, then go down? Or is this the end and we go down? Or do we go slightly higher and we go down? All roads lead to this, because all roads are going to lead to that 131.40 on the dollar index. Bottom line, we go 131.40 on the dollar. No ifs, no buts, no ands, no exceptions. We're going to 0.8, 0.7 on the euro dollar, period. All right. So I'm still more bullish than bearish, because that's a pretty strong argument. 75%, we're going to 127.45. 70 plus, we go on to 130, 131. That's still very bullish before we reverse and go down. But remember, price doesn't have to. 75% is still a lot better odds than 10% chance. Well, it still is what it is. That's why this big green box is here. It flips the script. The script right now says we had a high probability we're going up here. Well, eventually we're going down here. No ifs, no buts, no ands, my humble opinion. So at some point we are going to reverse to get down here. And when is the line in the sand? It's this big support zone. So from the low up to the high, guess what that is? My 618786 zone. We get below that, it's over. We're going down to 0.8, 0.7. But in the interim, I suggest, and based on this, we probably still need to go higher first before we reverse. So back to the daily chart. The euro pulled back. It pulled back hard on Friday's big run, right? We had Friday's big run. Look at that big red candle. Whoa. Dollar bounce. Euro's even trying to get back above. Ooh, it's going to get back above that magic fibbo. And then boom. Friday, big sell-off, dollar spiked way up, euro spiked down, inverse relationship. But I would not write this off. It's still holding the support zone. We got to get below this. Just like the dollar's got to get above its resistance zone, the euro's got to get below its resistance zone to set the tone. Yeah, dollar's breaking out, euro's breaking down. And knowing we have these higher probabilities on that bigger scale, that we need to go visit 127.45 and that 130 area is still higher probability. This is probably going to continue to climb than it is to break down. But in the interim, you need to be taking profits in a position of authority. Everybody's good? So what do we mean by a position of authority? We mean that as you start bouncing, get to a position where you either take profit one and you move your stop loss up, or if you want to let it run, you move your stop loss into profit so that if it does reverse, it'll stop you out for some profit. Otherwise, expect this thing's probably going to climb. We shall see. Got to get out back above this 618 zone. Then we need to get above the magic fibbo. We break that swing point, it's over. So what's some shorter term targets? Well, we got multiple shorter term targets. We get above this, you can go long around that 1650, which is about another 100 pips to get up there. We break above that, then it sets the tone. We're going about 100, well, 200 to 250-ish, 118.90, basically 119, 119.30. What is that? If the euro breaks above the magic fibbo and we close above that 1650 area, then it sets the tone. We're going to 119.50, 118.90, 119.30. So that's a good 200 plus pip run. That's nice. We get up there, sets the tone. We got a 75% chance we go into 121, 122.60. Well, that's another 200 to 300 plus pip run. Nice. And what's that en route to? That bigger picture, I don't know if I can get all the way over there on a daily. Yeah, barely do it. But then it sets the tone. We get up to those extensions. Then we have the next set here, 2280.25. And we get there, it sets the tone. We're en route to the bigger one, 2750, 130. So notice these extensions on each move. We have those, and they're there for a reason. If you're scalping, wait until you get here, take some profits, probably get a little pullback, then go higher. Get these, pull back, go higher. So is this thing ultimately going to break out? Percentages are still there. 127.50, 130 until they're not. When is this off the table? When we break below this guy, then what's on the table? 0.8, 0.7. All right. What about the pound? It too took a nice little dive on Friday. Dollar had a nice little strong push. The pound was trying to break back above the magic fibbo, trying to get the party started back to the upside, and it dipped. But don't write it off. From the recent low to the high, we're in that 618,786 zone. We held. We even have, this is even more appealing, the pound sell-off actually has a higher low. Nice. So what happens if we get above that swing point here around that 135 and change? There's 135.18, so about 135. We're going higher high, right? We go higher high, that takes resistance out. What happens when we get above this resistance zone? Anybody want to know? It says we have a 75% chance we go into 139.70. We have a 70+% chance we go into 140. I like it. So what's that? We got to get above this swing point around 135 and change. That sets the tone. We're going higher high. And by going higher high than this guy, that sets the tone. We're breaking the resistance zone. So bottom line is we take this out. We're definitely going to go testing that. We get above that, we're going here, 75%, 70+%. Well, what else do we have positive sign? Go out to that weekly, do the same thing we just did on the euro. And the pound, even more appealing as well. From this low 4 years ago, remember, I can't tell you what to do, no buy, sell to hold, but I told everyone that was listening, that was in a smoke signal view, that you might want to consider going long the pound dollar. It's going to take this correction and go thousands of pips higher over the next several years. What did it do? Thousands of pips over several years, and we still got a little something left on the table at 147, 152. Why is that a high probability? Well, from the recent high up there to that low, we broke the 618 way long ago in 2023. We got that close above on that weekly candle, suggesting we were going where? 147.70, 75% chance. I like those odds. And we have a 70+% chance we're going to visit 152 and change. Nice. And then that wasn't it. We pulled back, we kind of chopped, tested the 786, pull back again, and then ultimately, bingo, bada bing, we got daily, weekly, monthly candle bodies that closed above that 133.70. And look, we're above it right now. 33.99 is above 33.78. Even after all this chopping in the zone, we're still above it. So what did that mean when we closed above 133.78, which again was a long time ago? You can see we had a candle body over here like in May of 25, over a year ago. we closed above that 786. That reconfirmed we're going to 147.70. Reconfirmed we're going to make a run towards 152. Got it? All right. So much more pros to go higher, even though I'm telling you we go higher or not, we're still going lower low. When the dollar breaks out and it goes up to that 131.40, the pound will break low, that 103 low, and break below parity and go towards that 0.98, maybe 0.8 zone, somewhere in this area. So what's the probability we go up here? 75% chance. Once we get up there, I'm looking to establish a nice short position because we're expected to go lower low. That's thousands of pips up. And then when we finally get there, thousands of pips down. Got it? That's the big, big plan. Short term, we got to watch some areas, just like the euro, just like the dollar index. We're holding that 618 I just showed you. We did get a higher low at the moment, if I draw that correctly. We did get a higher low, which is still bullish. We're still holding the 618.786 support zone. That's bullish. But what do we need to do to start setting the tone? We're ready to go breaking out. We got to get above that 135. What happens if we do that? Well, it sets the tone with a 3.2. You don't think we have enough lines on here? Watch this. This is a 3.2. They call that the time-based, trend-based Fibbo extension, basically Fibonacci extension. And you go from the recent low, you go up to the high, you go up to this higher low, and that would suggest that, and look at confluence of events in that zone, that even if this is an A, B, C type of correction, then we should at least go toward 138, maybe push toward 139 zone. Who's overlapping in that 139 zone? That low, that high. We haven't closed above that 618 yet. We tested a couple of times and failed so far. But if we get what we're looking for, we close above 135, we go higher high. That sets the tone. Bingo, we're going up there. And in both cases, confluence of events, we have the same target zone, that 139, 140 area. Okay? Can I guarantee that? No. I can say that if we get above that swing point and we close into this 618.786, then it confirms we got a 75% chance we're going to 139.70. I'm definitely leaning that way. Why? Because of that bigger picture. We already have what we need on that bigger picture. And that is, we closed above the 618. We reconfirmed it above the 786. We're going to 147, 152. Well, if we're going to 147, 152, guess what, my friends? We can't get to 147, 152 without reaching 138, 139, 140, continue on, eventually breaking above 42 en route to 47.52. Got it? All right. Be careful with the euro yen, pound yen combos. We're expecting they're probably going to fizzle. We got the sell-off on Friday. We're trying to bounce again today. But this price action is not conducive to, we had the big run-up. We had this correction. Okay, well, that would say we're going breaking out. But all this chopping, overlapping price action suggests otherwise. And that's why I warned you, even though we made that higher high, we were due for a nice pullback. And man, we made 500 pips in one day. That was nice. And now, since then, we've been chopping. This is still overlapping. So is this like a bottom and we're ready to go breaking out? Doesn't look like it. This over here was questionable with all this action. So this still looks like, in my humble opinion, those that like ABCs and 1, 2, 3, this looks like the initial move. That's my A. All this chopping and overlapping is the B. and we're in the process of working on our C down. And I would suspect that as long as we stay below this support, this resistance zone up here, which we tested several times and failed, went lower. Now we're coming back, still testing a 618786, even off of that smaller move. I can see it in the chart. That suggests we're still going lower low. Plus the software has the monthly overbought, the weekly overbought, the daily. So I never really like to go long when the software is saying going lower low. Combine that with this technical picture saying we still need to go lower low to clean this up. So yeah, I'm continuing to go short, get a position of authority. If I get pipped out, then I go short again. Well, what if, William Bruce, this thing just says, hell with all that, we're going to break above this resistance zone. Then I'll be targeting at 188, 189. High probability. We get above this resistance zone, we're going to go visit that target. What if, William Bruce, it did that? I'm going to short it back down. Pretty simple. Because again, all this price action, even with this going up yet one more time, still suggests more downside to clean that picture up. This does not suggest we're going ripping to the moon, Alice. We're just going straight up. This price action does not warrant that type of movement. And sure enough, even after the big pullback in this, we've been struggling, which looks like not very clear, but that looks like a 3. This looks like a 3. And what do we need? Maybe a 5 down. 3, 3, 5. A bigger correction off of this A, B, and this would be my C down in here. Where's my extensions? We're looking, we break the magic fibbo, which is that swing point, then it opens the door around that 178, 177 range, which is several hundreds of pips lower. So don't think this is ready to go breaking out. I think this is a false bounce, and it's going to falter and head lower. Because this does not look complete. Even after that move down, this looks like 3-wave. If it's not, then this is overlapping again. So the same thing, we had this overlapping here, and we got this big pullback. This is overlapping, so what's coming? A pullback. Pound yen, kind of the same thing. It too, this looks impulsive. This is overlapping and chopping. We rallied into the resistance zone. We broke down. We're trying to go back. We got to clear the hurdle. What if we close above it? Then I'll target 217, 218. But until I get a close above 216 up here, then I'll look for about a 100 to 200 point run. But what if, William Bruce, it did that? Because again, this is overlapping and chopping. This looks impulsive. This is still overlapping and chopping, even though it went to a higher high. So on a bigger scale, this looks like the A. This overlapping chopping thing looks like the B. And this is part of the C playing out. And we should go where? Down toward that 208, 206 zone. That's several hundred pips. So be careful. If price is going to prove otherwise, I got to close above 216 up here. Then I'll look to go long for a couple of 100 points. And then what am I going to do if it does that? Short it back down. All right, there you have it. Let's move on to the markets. ES. Be careful with this. This is like a head fake in the making. We had the big sell-off on Friday. I warned you about going into this insane run-up. Right, Harold, we kept talking about it. Watch out. This push higher this was totally 100% what we expected. This. At this low, let's go back a few months. When we had the high, we had this low. We barely breached a couple of times, all-time high. Woohoo! Didn't hold them, right? It kind of poked up there, all-time high and pulled back. Then we did it one more time, all-time high and pulled back. All this chopping and overlapping, kind of like that euro yen, pound yen, that correction, then you had this overlap, 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 overlap. What did I say for weeks? Ladies and gentlemen, before we go breaking all-time highs again, we need a lower low. Ultimately, what happened? We got our lower low. We got this low in April, and we were talking about writing me out. Man, it's a good time to go long. I'm going to expect this thing at least to go running back toward the highs. And this should take like toward May, June. Well, this thing decided, well, hell with May, June. I'm going to rip up there in April. Let's do it a little bit faster. But this was definitely expected. Well, this thing went on into May, June, where we are now. I expected the big sell-off into the fall. So this could be the beginning of a bigger correction. We still got several weeks to go. So this thing could possibly correct a little more, go bouncing into July, and then we get the sell-off into the fall. But the more we get that big run up, and if this is just a little small correction and we continue to break out, then it sets up the bigger fall in the fall. So I still have in the pit of my stomach a big retracement coming into the fall. Is this the beginning of it? Maybe, right? What if this is the head fake bounce and we're going lower low? I say we're going lower low. Why? Because this price action does not look complete. This was a hell of a run. So where's an ideal place to go for there? Take some of these off so we can see this, remove, and I'm going to run some fresh ones on here for you. So based on the correction, I don't think this is ready to go breaking out new highs. I think it is going to sell off, kind of what we talked about. And where is a nice target for this to go to? Well, the first place, and remember a little trick here, you hold your control key down, this sets this magnet mode on, and then you just scroll over by the candle, and then up here, we have this low to that high. We're expecting lower low. Where's my first target? Right around this magic fibbo. So magic fibbo? That's the first target. So Harold, is this the initial move down and we got to push? Then we do maybe a little three-wave correction in here, and then we push down magic fibbo. That's a logical target where we're headed to. If we don't hold that, then we got our 618786 zone. This green box, which I'll readjust because we did go slightly higher now, but there's your 618786 zone right there. So first downside target, magic fibbo. Second target, your 618786. And if we don't hold this guy, guess where we're going? Lower low. Right? Low, high, break below 618, magic fibbo and 618, candle body close. We're likely going to 61, 6,000 range. Is that part of the fall pullback? Well, I'm still potentially expecting that bigger pullback over here, and that would be ideal. From the Liberation Day low over here up to that high, it puts us right in the zone for a beautiful 618786 retracement combo bounce off of a weekly magic fibbo, and would set us up with some stratospheric type of targets going into next year. Well, how is that going to play out? Let's see. That's part of the fall in the fall. So we have this Liberation Day low. We have this current high over here. You can see where the 618 is right there. Guess who's sitting in the neighborhood? Huh. Emil, you can't make this stuff up. That's the initial. We get the fall in the fall. Then we go blasting off into next year. Santa Claus rally into next year, maybe first quarter, maybe second quarter. All I know is once we get to the stratosphere up, I'm looking to short this baby down because we're going to get a big correction after that. So I'm already like 4 or 5 steps ahead of the market. If this plays out based on these levels, we go lower low, we bounce. There's a lot of, what ifs in here. But if this plays out where we get this bigger retracement, it potentially sets up this stratospheric move, It could even push us into 10,000 range. What? ES at 10,000, and then we could see a market crash after that. What do you mean? AI. So you use a 3-point tool. You go from this low, you go up to the high, we get this fall in the fall, and we come back near this magic fibbo. Well, that would suggest if that holds and we do get this big sell-off into the fall, and then we get our Santa Claus rally into the year, into next year run, that would suggest even if this is just a big correction, we would at least get to 87 and change, pushing maybe 9,000, upper eights, 9. Well, if we get what we're looking for, you get what we call a 618 retracement combined with a magic fibbo bounce. We call that the combo meal. A lot of times it'll push toward a 1618. So that would potentially put us in the 10,000 range. What if, William Bruce, kind of like the same tune? What if we get this pullback in the fall and we go blasting off in the next year up there? What am I doing from there? Shorting the daylights out of that thing. Big time. Really big time. Amen? All right. Just 1 second while I pull that chart up. See if I can find that real quick and show you what I'm talking about. It is very leery, eerily the same about the way this has been playing out. Very much so. Let's see, where is that chart? If I can find it real fast. Yep, there it is. Alrighty, let me focus that in. Bear with me while I do that. Bring this into view. And almost ready. And you know, I've shown you this before, but it's very impressive how it is very similar what's going on and what in the past has happened. So this is my favorite chart to watch. I get little chills and goosebumps when I look at it. But what does this represent? This is S&P 500. This is the NASDAQ. This is like father, like son. So back in the dot-com bubble burst between 96 to 2001, this is the blue line, which you can see started, and we just kind of grinded, pulled back, grinded, chopped, grinded, finally topped out, and then went down. Now, admittedly, in the dot-com bubble era, that was pushing towards 1,500. This is the dot-com bubble scale of price. This is the current scale of price, and this overlaps current price. And notice the red dotted line kind of overlaps, not perfectly, but very, just looking at this thing, it's like, wow, it is doing exactly the same, right? So where are we? We're already pushing 75, and notice the difference in the two right now. Let me get my little marker. Notice the S&P ES is supposed to do a lot of chopping in this zone when the NASDAQ just starts ripping. During that same period of time, 99 to 2000, during the dot-com bubble, this starts chopping and then eventually tops out for the big fall and the big crash. So is this Elizabeth, I'm coming to join you, honey, representing, well, just because this happened back in the dot-com bubble and this current run we're on matches that pretty well. Remember when we first started talking about this, we're like, man, I don't know if we can get to 40,000 on the NASDAQ. And then what happened? It's been ripping. We got to the 30 range already, and we're kind of pulling back. So can we get that last push in the next year? That little pullback? Well, let me show you some numbers that kind of suggest. Well, Gary, well, you're talking about 7,500 here and pulling back. Well, what about that if we get that fall pullback and we go pushing 8 or 9? Well, so what? It's still showing we're going to get the big one coming thereafter. No matter how you slice this thing, the big one is coming. We got too many problems, cracks in the foundation. AI bubble burst, commercial real estate, over 5 trillion in commercial real estate. That bubble can burst. It could be anything that could do it. And it's not a matter of if, it's a matter of when. So this is kind of what we're in now, chop zone. This thing could give us that last push into next year, and we both get the last push into next year, and then we get the big correction. So this is what's setting up for this bigger picture. And if we can get this pullback in the fall, and then we go ripping in the next year, yeah, it'll push the parameters off of that scale a little bit, but it still says we get up to this area, man, we're due for that big crumble. Rumble in the jungle, or whatever it was, we're going to crumble coming soon. So yes, be careful. I do think we got to go make another push lower. So I think this is kind of a bounce fake or a dead cat bounce. Many people use different terms. I still think we got to go lower low for the correction because this thing was insane. That was an insane run. And the more parabolic, the more vertical you go, the deeper, the stronger the correction, right? Well, Gary, if we get that weekly pullback we're talking about lower low. Yes. So the fall in the fall could give us a lower low. How do we know we're starting to look toward a lower low? Do the math. You got the low, you got the high. We don't hold the magic fibbo. Harold, we start breaking below this 60, what is that, 68 area. Start closing below 68 area. Then that kind of sets the tone. This low, that high, we don't hold the 618 zone. We go lower low. And look who's exactly in the neighborhood of that lower low. Who is there? Who, you say? Who? Who is at that extension lower low? Magic Fibbo on a weekly chart. Can't make this stuff up. And notice it's sloping upwards. After that run, this thing is sloping up. So I'm just kind of showing this, that this magic fibbo is still sloping up. But if we start declining and break below this and make a run toward it, this thing's going to start flattening out a little bit. You notice we're on a very steep slope. We got that big run. We started to flatten out during that run down for Liberation Day. So I would expect more of the same. We don't hold the support zone. We get the fall in the fall and we get down here. That would set up a salivate country. Just like we said here, after that pullback, let's look for this thing to go breaking out. Well, we get this pullback into the fall, and this would set up the extension to go to the higher high, which is off the chart up here. That could be some massive run, but I'm going to salivate to buy down here and look for a big run going into next year. Do we get down here? I don't think we can get up here in the 9, 10,000 range, upper 8 to 10,000 range without that bigger correction. I don't think we got enough juice to just continue to climb that high. I think we need a pullback, a beautiful 618 retracement setup, bounce combo meal. What's that? A 618/weekly magic fibbo bounce combo to set up at least this to potentially push it toward that 1618, which would break the 10,000 barrier. Wow. And what? Short the daylights out of that thing. What if we get up here? I'm shorting. In the short term, be careful because this looks like we need more of a correction. All right. So I don't think this is the breakout. Well, that's the sell-off. This is the end. We rallied and we're ready to go breaking out. I think we got a more correction coming. First target is the magic fibbo, right around that 69, 7,000, 69 and change. You can see the numbers over here represent this magic fibbo. We don't hold that. We got the 618 zone off of the prior move. We don't hold that, then it's likely going into the fall decline, and we're headed down to this 61-ish, 62/6,000 range, which basically is simply stated a weekly magic fibbo. Yep, 61/6,000 range right there. So is it going to play out, ladies and gentlemen? Are we going to get the fall in the fall? Is this the beginning of that? Well, it's still early. We could dip a little bit more, rip up, make a new high, still fall in the fall. And then September, October-ish, get that Santa Claus rally and push into next year. But we shall see. Or because this thing, again, was not expected to go ripping that far, it was supposed to go back toward the high, maybe slight higher high. Nothing like that. So maybe because we ripped this so fast, we're early to the fall in the fall. And we just start declining and making moves. And we'll get some up days, some down days, etc. I don't expect just sell, 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 sell. But once we down here, I'm looking to buy for that bounce going into next year. Amen? What about the NASDAQ? Kind of ditto. Well, NASDAQ's kind of ditto. We had that massive run up. Bring this back into perspective. This looks like it's potentially wants to go breaking out. It's a little dip. Buy the dip, man. Buy the dip. People get on the wrong side. This suggests we're going lower low. We almost got there, and we're kind of bouncing today. We almost, but I think we're still going lower low, even if we do go then breaking out, but we probably need that bigger retracement. I like the weekly scenario. You know how I feel about my weekly in the fall. From that Liberation Day low up to this high, who's in the neighborhood of a 618, magic fibbo, Harold, can we get this run and get a pullback 618 type of magic fibbo combo bounce? Where would that lead us for potential for the NASDAQ? Well, check these numbers out. Use the 3-point tool, right? We have a low. We have a high. We get the fall in the fall, and we come back toward that magic fibbo 618 combo bounce. And lo and behold, we're up in the 40,000 range. Wow. Is that what that picture is suggesting? Is that what it's suggesting? Maybe. But let's just see if that plays out. Can we do it? Can we do it? Be careful. So in closing on NASDAQ, closing on ES, I don't think this little dip is the end and we go breaking out. What if I'm wrong? Go to your lower time frames. And this suggests why I'm not wrong. But even the lower time frame, what if this is the, run up, pull back, and we're ready to go breaking out? We have to claim some of this price action and move higher. 2-point tool. We have a high. We have that sell-off low. We got to get above this resistance zone before we even start thinking, yeah, we're going to go breaking out. So we have a lot of resistance we got to get through. This will be pink up here. What is that zone? You well know, 618,786 off the prior high to low. We got to get above this to warrant going to 31.95, 31.350, 32. If I'm wrong, then price needs to hold what we're testing, break above the magic fibbo, number 1, break above this resistance zone, number 2, and yeah, we start closing above 30,400. By all means, let's go another 600 points toward that 31, maybe 700 plus points to go to around that 31,350. Sounds good. But this also sets up a lower low, which is more likely to play out after this insane, and this is on a 1-hour chart, But even if you bring that in, look at that run. That thing is just insane since our pullback we looked to. Vertical, just climbing and higher and higher and higher and higher and higher. Well, that kind of set up the apple cart coming back down to that low. That's probably why it bounced. But this is lower high. We don't break above this. We're going lower low. And where's lower low? Well, you can stretch this out and give you some downside targets. That's the Tucson. What does that look like? Zoom this in, bring it into perspective, and say, okay, what is my downside target? It's going to be in the same area we've been talking about, but 3.2, we have this high, we have this low, we have this lower high. This suggests we're going down to 27.8, 27.5, kind of in this zone down here. Would be a nice little area for us to go visit, somewhere in that zone. Maybe bring that down just a little bit more. It kind of lines up with this 27.8 down to 1272, kind of that zone. So in my humble opinion, based on what I told you was a warning going into last week's, so we're due for a correction, warned you, we got it. Well, it's not over. Also, in my humble opinion, Harold, this is not over. This suggests more downside. Amen? All right. If I'm wrong, and all of a sudden, well, this just happened and that just happened, we close above this, we go up there. But the higher probability is lower low. Is this the beginning of the fall in the fall? Maybe. What happens when we get here? Bigger picture. Go back to the daily. There's the zone we're looking for. What happens? We don't hold that zone when we get down to those extensions. We got the daily magic fibbo. We get below the daily magic fibbo, it sets the tone. We're going lower low. And who's lower low once we break the daily? Our weekly, right? So let me get, I think it's that guy right there with that label. If I can grab him, he's there he is. And remove that. Now, so zoom out, zoom in, and get the bigger picture. What if we get this extension down here and that doesn't hold? Then we come back to where this crazy breakout occurred. This big run to the moon, Alice, to the moon. So expect we're going to go lower low as a high probability target. We don't hold that zone, likely going to retest the magic fibbo, excuse me, the breakout area first. We don't hold that, then it's likely we're going to get that fall in the fall. It also lines up beautifully from this low up to that high. Guess where that 618-786 zone is? You want to see some more magic? You go, Gary, there's nothing but lines everywhere. What are you doing? Giving you levels. Nobody said it had to be pretty. There's the low, there's the high, and the 618-786 zone. See it? So we don't hold this. We come back to the 618-786, which is what? My prior breakout. Kind of where we chop zone. Wow. So Emil, we hit here. We don't hold and bounce to go breaking out. We continue the journey. We come back and retest that breakout zone, which is also from the low to the high, my 618-786 zone, confluence of events. We don't hold that. Fall in the fall continues, and we get our weekly magic fibbo 618 Liberation Day low up to the high. We get the fall in the fall, and then that sets up potentially. We hold that, go breaking out and blasting off into next year, Santa Claus rally in the next year. And where do those targets come in? Stratospheric type of move. Up here in the upper 130, 36,000, pushing as high as maybe 40,000 plus. Wow. Where does that come from? That low, that high, this higher low, that sets this number right there. That's the 1272, 1448, 1272, and potentially pushes toward a 1618. Whoa. So again, I still have reason to think we're going to get in the pit of my stomach, some kind of fall in the fall, then a blast off in the next year. And if it turns out it is a 618 / magic Fibbo combo bounce, then this is salivate country for a big run in the next year. And then once we get up to the stratosphere of upper 36,000 to 40+ thousand range, anywhere in there, looking to short that back down. Elizabeth, I'm coming to join you, honey. Here comes the big one. So, closing. Be careful. The bias is we're going to go lower low. We got some targets, 27.8 down about 27.5, 27.3 zone. So I guess I can stretch this out a little bit so it incorporates all the above. Bring this up. Bring this down. Whoops, bring that down. Adjust it just a little bit. So be careful. This is a beautiful small failure of a 618 retracement. Try to touch it. Got a 50% failing. Suggests lower low. We don't hold that. Magic Fibbo. So I'm not going to tell you, well, Gary, what if we get this perfect move down here? Could we go breaking out? Sure. That's kind of what that picture says. We're going to make a run toward 40,000. Pay me now, pay me later. I would just prefer whether we get something like this now, we go later, and then maybe July, August, September, October, or maybe we push up there into July, then it's August, September, October. We get the fall pullback. But if we get what we're looking for in that weekly chart, which is the fall in the fall, and we get a low from the liberation day up to the high, we get that 618 / magic Fibbo combo, that does set up stratospheric move into the upper 30,000s / 40,000 area. Got it? All right. IWM trying its best. Are we going to get to that? Let's do Russell first. Or are we going to get to that 3,100 zone? Yeah, we got right to the base of our original target, a little bit of a correction, but I still think there's more upside to come. Do we need a deeper correction first because we had a nice little run as well before we go up there? Or do we do the combo liberation day low up to the high? We get all the above. And we do what now? We do a stratospheric type of bounce on this guy. That would put us in the 3,500, maybe push even 4,000 on Russell. How do you trade the Russell? Most people trade IWM. Talked about reaching that 300 zone. We fell just shy of about a few points, but it's not over. I still think we're going higher, especially if we can get that weekly fall kind of pullback combo bounce kind of thing. Then that would put us in perhaps even the mid 300s. But be careful. This one could do a little bit different than the rest. But this is showing the same kind of weakness right now. We kind of came back, tested the zone. We got the support zone. What happens if we don't hold this? We go lower low. Right? So do we need this correction? This has been a hell of a run up. This is a 1 hour chart. Nice big run up. Probably need a little bit more downside. And from that recent low over here, what are we looking at? That low, this high, I guess this is probably somewhere, let's see which one's higher. Close enough, I guess we'll do that one. It's all in the same area. We don't hold the support zone, we come testing this. It also could set up a little bit more downside because there's my 786. There's my 618. So we don't hold this, we go here, we don't hold that, we do that 618, 786 type of retracement. All right, so be careful. We expected this. Now we need a correction before we go up. And I still think before this is done, we're still going to get to that 3,100 level on Russell. So Russell, 3,100, still the target up here. But we may need a correction first, and we get that dip into the fall, then run into next year. What about the Nikkei? Nikkei is global liquidity. And if this baby starts breaking down, it's going to pull our markets down. We've had a hell of a run on this guy as well. We need a pretty good correction. Is it over? I don't think so. I do think we're going to go higher before it's done, but we certainly need that correction. And going out to the daily chart, we see a little bit more price action. And we can see the same type of move. And do we get some similar, even on this crazy move up? Recent high to low. We can't hold support zone, magic Fibbo level. Then we go lower low. We don't hold the extension lower low. Guess who's sitting in the neighborhood? Weekly magic Fibbo. Even if I change that to that, really doesn't change the outcome. My 618786 is still in the zone. So from that low to the current high, that low to that high, we get that correction, 618786 magic combo bounce. This thing could set up a stratospheric bounce into the 80,000, if not even pushing 90,000. Sounds insane. But I don't think we're going to get to that 80, 90,000 without the correction down toward the magic Fibbo. So let's see. Is this the run up? We get a correction and then we go higher? Or do we get the fall in the fall and set up the big run in the next year? Well, I can tell you, if all these line up perfectly, where the Nikkei does it, we get the ES to do it, we get the NASDAQ to do it, we get the Russell to do it, we kind of all line it up together where we have the Liberation Day low up to the current high, we get that fall in the fall, and then we go bouncing in the next year. That thing sets up stratospheric moves. And as the global liquidity goes, so goes our markets. So you're not going to see the Nikkei go plummeting tens of thousands of points and an ES continue higher, NASDAQ continue higher. It's what we call global liquidity. It's kind of a measurement of the liquidity out there. When the liquidity is flowing strong, the markets can run. When liquidity is being sucked up and absorbed and evaporating, it pulls these down. Amen? Any questions? So closing on the markets right now. ES, just to recircle the wagons on ES, probably going to get a much deeper correction by the fall, but this correction suggests we got to go lower low right now. So what is lower low? Lower low than Friday's sell-off. We're going to come down to that extension. I'll go to a little bit lower time frame. We're already starting to test the zone. So if we don't hold it, what does that tell us? We're likely going to make a move down to that 7,000 to 68 range. We don't hold the support zone, then it says we're going lower low. So what do I mean lower low now? This is we're already doing it. We're going lower low. Do we go lower than Friday's low? Yeah, that's a given. But do we go much lower and set up the much bigger correction? Probably. So on a daily chart, you can see where that daily magic Fibbo is. Very important zone. We don't hold this, where we're going. We're going test it. It's right at my 618786, kind of at the 50% retracement right now, but that's still that same zone, right? This is the uprights. 0.5 to 0.78 are the uprights, and that's where I think we're headed at least. If it turns out it's the fall in the fall already starting to unwind, then we're going down towards 6,000. Amen? Short term, low. So, in my humble opinion, any rally should be sold. Any rally should be sold because we need to go lower low. And I warned you this last week or so as that rally went up. Said, yep, we got the extension. We did this little dip, and then the bulls step in. We go to the extension. We get a little dip. The bulls step in. And what did I tell you going into this week? Well, one of those is going to come, and then they're not going to step in, and it's going to sell off hard. Well, that was Friday. And now this is continuation. Beautiful move. We're already showing that we need to go lower low. We just took out our support zone. Right? We kind of dipped down here on Friday. We bounced. Look at that. Look, three-wave move. Harold, can't make that up. Impulsive move down. Three-wave correction. So what's left? Another impulsive move down. I'm just not convinced at this juncture. Could it simply be a magic Fibbo daily visit and not the weekly visit? Yeah. We're only talking a few hundred more points for us to get down there. We don't hold support here. That little breakout kind of test zone, we should go magic Fibbo. We don't hold magic Fibbo and we break below the support zone, then it sets up the fall in the fall. Can't make that up. That low, April run, we don't hold the 618. We then have a 75%. Look at the numbers, guys. We come down here to hold the magic Fibbo. We close below the 618. Basically close below 6,800. There's my 6,800. We close below that on a daily candle, not a wick like dipping down there, but we close below it. 75%, we're going to 6160. 70 plus, we're going to 6. Who's sitting right there in that neighborhood? Weekly magic Fibbo. Man, it's like perfect. So is this the beginning of the fall in the fall? Maybe, because it's still early. We're thinking fall in the fall would be like September, October, somewhere like that down here. Could we just kind of chop and grind and just do a little bit of this and eventually get down here by October? So yeah. Or we could dip, rip one more time and still do it. I still think this is viable. And if we can, William Bruce, if we can get down here by the fall or whenever we're down here, maybe it's a little bit faster. This was expected to grind up near the all-time highs and not go ripping like that. But it was expected for this April correction in that run would get wrong highs, these highs, by May, June. Well, April we did it. Now we did May and June, so maybe we're ahead of schedule. So we start to get the fall in the fall and we get it there a little sooner. Maybe it's August instead of September, October. We shall see. But the support zone is the support zone. We don't hold it, we're going down the magic Fibbo. Got it? And the short term, what is my target? Daily magic Fibbo. Break the support zone, we're going to daily magic Fibbo. NASDAQ, same thing. Basically looking at the same thing. What's lower low? 28, 27.8, 27.5, 27.3 zone. That's where we're headed. Hint, hint, hint. We don't hold that. Magic Fibbo. We don't hold that. 618.786 zone. And if that baby gives up, extensions to lower low puts us right in the zone of the weekly magic Fibbo. And that's what I've been warning for months now, that the fall in the fall likely going to bring us toward that magic Fibbo on a weekly. Let's see if that plays out. We'll just see how that plays out. So in the short term, NASDAQ E-mini traders or ES mini traders, any rally should be sold and look for these extensions to come into play. 27.8 down about 27.3 is my target zone for this. Next move down, we hold that, we could potentially go breaking out. We don't hold it, we go to the daily magic Fibbo. We don't hold the magic Fibbo, then we go lower low, which ties in with my daily. And I know I got a lot of stuff on this chart, but that's the whole point. We don't hold that magic Fibbo on the daily chart. It sets the tone. We're going lower low than Liberation Day low, and we're going to get that weekly magic Fibbo correction. Okay. All right. What about black gold Texas T? Setting up, breaking down. Not a bad time. Break it down, baby. Break it down. Well, man, we're still kind of stuck in the zone, so it's not a given. We're testing. What happened? We break it down. No, we're not. Oh, we're breaking down. No, we're not. Yeah, we're breaking down. No, we're not. Well, where did we stop? High, low, lower, high. Right in the resistance zone. And this does suggest lower low. Lower low what? 79, 74. So be careful, take aggressive profits, because remember, deal or no deal. Deal or no deal. We get a deal, we're going to 50, 60 range. No deal, we're going to 140, 150 range. Huh. That's a big, big area. We're still stuck in the I keep saying May, March 9th, March 10th range. Remember when you get these seed squeeze or wedges, whatever the size of the mouth is, ultimately when you break one way or the other, you're going to go that length of distance. That puts us potentially in the 140, 150 or down in the 50, 60 range. Got it? So one way or the other. This technical picture without rockets flying and no deal suggests we're going lower low. This big wide range and this overlapping, that looked three-wave. This looked three-wave. That's kind of, it's gnarly looking, but you're getting lower highs, you're getting higher lows. And based on the latest moves, that high to this low, we stopped in 618786 zone. This high to that low, we stretched it a little bit, but we still stopped and reversed. And this latest one did it again. So we're 3 for 3. That high, that low, hit the 618786, failed. Already have that one. That high, this low, hit the 618786, failed. This one didn't even have enough oomph from, let me do that one, this high to that low, 618, we didn't quite reach that one and we're failing. So yeah, the technical picture, Harold does say we're likely going lower low. We get below this extension, we're headed down that 50-60 target. All right, so it looked like we're ultimately going to break down in this direction, in my 50-60 range. But be aggressively taking profits. This thing could very easily go way up there. How? No deal, rockets fly, done. Deal, give up. I don't know what they're waiting for. They have no military left, basically. No Navy, any kind of ships. They got little Boston whalers with machine guns. So our dudes take them out, no problem. So they're on a limp and a prayer. They think they're dealing with prior administrations. We'll just wait them out. Maybe they'll do what they did in Iraq and leave us all the planes and all that military equipment. They'll just give up. Not going to happen. So deal, we go 50, 60. No deal, we go 140 to 150. I'd much prefer that because gas prices are starting to come down. Even at Costco, it was up we only do premium, but the premium gas was up 4+ range. Now it's down in the 350, 370 range for premium. That's not bad. Already coming way down. So if this thing breaks down to 50, 60, those gas prices are going to continue to come down. And you know my feeling about that. I can get on a rampage about that. Why in the world was any of this conflict affecting U.S. gas prices? Supply and demand suggests when supply is interrupted, demand is consistent or high, prices go ripping. Well, Strait of Hormuz had nothing to do with our gas and oil production. We're doubling, take Russia plus Saudi Arabia. We're doing 2 times what they're producing, just us, and pushing maybe toward 3 times what they're producing. You throw in the whole thing from Venezuela, millions of more barrels. We have so much crude, it's just our whole Louisiana to Texas, all those refineries are swimming in the stuff. But yet, the Strait of Hormuz affected our gas prices. Supply and demand says we have more supply than we ever have had. Our demand is not double, triple, quadruple, 10 times what it was. It's pretty consistent. So why, if we have more supply than ever, demand is about the same, why are our prices going up? Market makers? I think it's insane. They should have never raised our gas prices because it didn't affect us. Yeah, I could see China and some of the others, Japan, where the oil's not flowing through the Strait of Hormuz. That's bulk of their oil coming in. But here, insane. So be careful. Biases, we're going lower low, but I'd be in a position of authority even whether I'm shorting it. I told you, Dan, anything long, be leery, be aggressively taking profit, even to the short side. Yes, I think we're breaking down more likely than up, but it takes one little no deal rocket fly and we'll have the same scenario we had over here, Harold. What did I say? We need to go lower low to clean this mess up unless we get rockets flying. Well, same thing. This looks like we need lower low. Dude, we got to get down here 50, 60. That's looking right. All this chopping action, the seed squeeze, we broke out, I re-changed and kind of moved this line. Remember, it was up higher, kind of getting these lows in there. And they looked like we were breaking out. And then I said, well, let me just adjust that to kind of fit that in there because we got a nice bounce. Well, it looks like we're trying to break it still. What's next? Magic Fibbo. We break below Magic Fibbo, kind of sets the tone. We're going to 74.70. We don't hold that, we're going 50, 60. And that would be the size of that mouth on that breakdown. Amen? All righty. Be aggressively taking profits regardless. The bias is more downside at this point, but be careful around that Magic Fibbo because I suspect when we get if we get down there and we get there, we'll probably bounce off of that, maybe retest the backside of that trend line, and then continue lower. Unless what? Rockets fly. What about gold? There's gold in them there heels. Still think we're breaking down, my friends. Still think we're breaking down. So we really need lower low. Pretty straightforward, no question. We need lower low. So, do we come down, make a slight higher low, get that last little pop in this, or is this just going to break us down further? The goal is to make a lower low. Anything lower low is time to start nibbling on a buy zone. Again, I can't tell you what to do. No buy, sell, to hold recommendations, but the plan is to gold dips below 4,000, makes a new low, that is buy zone. Emil, my sweet spot target down here is 39 to 38 area, 39, 37, excuse me. Kind of sweet spot right in here. What happens if we get there? Buy some more. What if I'm Johnny on the spot? We dip slightly lower low, and I see a pop up, and I think, oh, wow, I'm glad I bought some. And then it goes up and then pushes down to 39.37. Buy some more. What if I buy some, it goes up and still goes lower? Buy more. So don't be concerned. I bought some at, 4,000 and change because it made a new low. Then it rallied a little bit. And then the next thing I know, it was sitting here at 39.37 zone, was your sweet spot. Well, what I do? Buy more. It bounces and makes another lower low, buy even more. The lower it goes, the more I want to keep buying because this thing is going to go ripping. And no, I don't think it's going to rip by December of this year. We're going to be at $7,000. No, but our target is 7 to 10,000. Here's the target, 7 to 10,000. Do I think it's going to reach that? You betcha. Go back in history and the archives talked about that low going into this move, saying, gold needs to get to 1,000 before it breaks out toward 3,000 and higher. We did exactly that. Well, I'm saying it again. It's not I predict this. Everybody predicts everything under the sun. I don't. I anticipate with the best of them. That's why we call our software the Market Price Anticipator software. It anticipates. And between my God-given talent to read and interpret price, the software combination, reading price and the software in alignment with the technical picture, man, this is a given. My humble opinion, but we got to go lower low first. How low? How low? I don't think we can get down here the monthly magic, Fibbo. What if we did? If I see gold anywhere in the 2000s, dipping toward 2000 anything, 2,900, 27, 26, 25, the lower it gets into the twos, the more I keep backing it up. Because that would be a quadruple potential if we got near 2,500 to get to 10,000. Wow. Hell of a move. I don't think we're going to be that lucky to get gold prices that low. I don't. What about the weekly? What if we kind of do the weekly type thing? Remember we talked about the markets, give us a weekly magic Fibbo kind of visit, and then we get gold to do the same type of thing. Well, from that low to the breakout high, we get a 618 combo kind of bounce doing the same kind of math. That puts us in 7,000 up to 10,000 range. And that's where I definitely think we're going. I'm very confident we're going up here. All roads lead to that 7 to 10,000. But I don't think gold is finished to the downside. Would I be insane to buy gold at $4,200? No, not insane. It's going to go lower before we're done, at least another couple $100. I'm looking for this thing to break back below the low and dip into the 4,000. So I'm looking for at least a couple of $100 more bucks. But that's not insane to buy it. Well, if you don't think it's going to go any lower, nibble. Buy a little something there. And it does go lower, which in my humble opinion it will, make a new low, then you buy some more. And what if I buy some at 42 and I buy some more at 4,000, buy some more at 3,800? That's dollar cost averaging. Because I don't care if you buy it at 42, you buy it at 4, you buy it at 38, whatever. That's fine. 3,800, that is. And we look for what? What if we get this weekly? That's right around that 33, 32 zone. Man, you talk about salivate country. What if I bought it at 42 and I buy some more at 4 and I buy some more at 38 and the next thing I know it's sitting here around that 35 zone? Buy more. Keep buying. Dollar cost averaging, because this thing is going to go ripping. And I think it's going to rip up here by next year? No. It took a while to climb. It's taking a while to correct. And it's going to take a while to climb too. But do I think we're going to reach that 7 to 10,000 target? You betcha. You betcha. Just like I said way back when it was at 1900, had to go to 1,000, dip its toe into the 1,000 realm before it went off. Go back to that monthly. It had to dip its toe down in here before, which was in the 1,000 range, before it then went ripping. Well, I'd love to see this thing dip its toe into the anything below 39, 3,700 is a steal. We get to about 3,900, 3,700, then that's a steal of a deal. Anything lower than that, get on your knees and thank the good Lord above. But wouldn't it just be perfect if we get the fall pullback and everybody follows suit? We get gold to do it. We get ES to do it. We get the NASDAQ to do it. We get them all to do it together. That would be fantastic. Now, I don't think, as I think ES and NASDAQ and all going to go breaking all-time highs going into next year, gold probably take a few years to get up there. All right? Because what do we need for this thing to go ripping way into the stratosphere? Our market crash. What do people do when the markets are crumbling and crashing? Go to gold safety, right? It's uncertainty in the markets. These things are going down, down goes Frazier, down goes Frazier, down goes Frazier. And people are going to pile into gold. And that's how we can get to this lofty level. That's why I think it's coming. Elizabeth, I'm coming to join you, honey. It's coming to the markets. And that's when gold's going to go on ripping. But it's going to take a few years. I don't think we can get up there that quick. All right? Any questions on gold? How about silver? Silver still ditto, my friends. We must make a lower low. Been warning you about that. Even when that little rally came back, that big sell-off in that rally, I said, don't fall for it. We got to go lower low. Even after this lower low, we got that big, beautiful lower low. I don't think it's finished. Still need a lower low. It's still corrective and overlapping and still need lower low. Remember the silver train? We were part of it. Part of that silver train, baby. And what did I warn you when it goes parabolic? We got to come tumbling back down, at least 50% decline. That initial move down was right at 49.8%. Oh, we're going to get out 50% plus? You betcha. So, ladies and gentlemen, I still think we got to go lower low on silver, just like gold. Amen? So we did get lower low there, but I said that's not it. And look at that move, Harold. 3-wave, my friends. That is not conducive to breaking out just yet. That was conducive, and what even on this one? Big sell-off, 3-wave. Might have some, method to this. So we went lower low. We got another 3-wave. What is that screaming? Lower low. So anything lower low on silver, time to nibble. Anything pushing into the 50s, add more. Anything dipping into the 40s, get on your knees and thank the good Lord above. We get anywhere near the 40s. That's kind of the back the truck up zone. So are we going lower low in my humble opinion? Yes. Do we have to come all the way down and do that weekly magic Fibbo kind of deal? I love it. Man, we get anywhere near the 40s. Load it up. Because then, once we get the big market crash coming and gold and silver start ripping on their next journey, where's that target? Up here at 150 to 200. 150 to 200, my friends. You really think silver's going to get up there? Yeah. Remember we had a conversation when gold did its thing and silver did its thing, and I kept saying, we're going to break 50 and we're going to make a move toward 100. Huh? And we're sitting at $11 during this COVID thing down over here. I was like, man, if you're not buying silver right now, I don't know what you're waiting for. This thing's going on a massive run. We were in that trade forever. Ran up to where we talked about. Now, even with this insane run, warned you, when you get parabolic, you get a 50% retracement. 49 and change, and we're going to go lower. We're going to hit it. And like I said, we get anywhere near this weekly magic Fibbo, then man, you're fortunate. Do I think we can make it to the monthly magic Fibbo down in the 20s? No, I don't. But what if we did? I'm buying when we make a new low. I'm buying more when we get down to the weekly magic Fibbo if we can get that far. We get anything lower, I'm going to keep dollar cost averaging. And the whole time it's down and bouncing around, if that were to happen, gives me plenty of time to keep adding and adding and adding and adding and waiting for the blast off. So we're going to get another one of these after we finish the correction. We need a new low. Definitely think it's coming. That low right there. So anything dipping in the 60s is the buy zone. Anything in the 50s is buy more zone. Anything below 50 is get on your knees and thank you, bless zone, because all roads lead to 150 to 200. Amen? All righty. And Bitcoin. Ladies and gentlemen, the picture has changed. We expected a little bit deeper retracement. We got what we were looking for, but we didn't quite get it. Now that we broke new lows, we're going to 30 to 50. Yes, we could still get some sort of little correction off of here. Big picture, every 4 years, start off, we go Bitcoin halving. Post halving, you go on a 12 to 18 month run. Then you get crypto winter low, which is the green lines. And then you get a 12 to 18, well, the next halving, 12 to 18 month run. Then you get a crypto winter low. Then you start moving toward the next halving, next 12 to 18 month run, crypto winter low, get the low, and then what happens? You start running into the next halving, 12 to 18 month run, get the math. So notice what Bitcoin has done every 4 years. Back in 21, we topped out, went into winter. 25, most recently, topped out, we're in the crypto winter. Previously, 13 over here, or 17 first. So what is it? 17, 21, 25. You come way over here. What was that? 13, right? The peak, 13, 17, 21, 25. Do the math, Harold. 13, 17, 21, 25. When's the next time we're going to top out? 29. And then you look at these lows over here, 18, 22. Way over here was 14, actually, right over there was that low. It's actually on there. 14, 18, 22. We continue every 4 years. 26 is where we're going to bottom. We're not there yet. My big target zone is anything below 50,000. Start buying. We get to 40, buy more. We get to 30, get on your knees and look to the heavens and go, thank you, and continue to buy. And we hold it from 26, fall of 26 is ideally when we should be down here. But any day it tips 50, I'm buying some. It dips 40, I'm buying more. It gets anywhere toward 30s, dips its toe in the 30s, I'm buying more. And I'm going to hold it till when? Next halving in 28. 12 to 18 months puts us in the fall of 29, right? 25, 21, 17, 21, 25, 29, rinse and repeat. So we're going to buy 50,000 and lower, and we're going to hold it for 3 years till it's 200,000 and higher. Bingo, bada bing. Couldn't be more adamant about, man, 20,000 Bitcoin below 20,000 is committing a crime. It's a steal of a deal. You'll regret you don't buy it here because when it gets up there, you're going to say, I shoulda, coulda, woulda. Well, you got your chance. Shoulda, coulda, woulda, start buying at 50. You buy at 50, you think, well, damn it, it's at 40. I should have waited. Nope, buy more. cost average. And then you go, Harold, I should have waited because it went into the 30s. Keep buying. The more it drops, you just suck it up and go, yeah, I love it. I know I bought some at 50. I'm going to buy more at 40. I'm going to buy a bunch, as much as bunches and bunches if it can get in the 30s. And I'm going to be patient. And all this time I'm buying and I'm buying and I'm buying. You'll see some choppy volatility. And then when we finally hit, or we're going to do another one of the ETFs where we actually break new highs by the time we get there. We only did that once with the ETFs. Every other time we were nowhere near all-time highs when we hit the halving, right? Hit the halving, all-time high, hit the halving, etc. Only time was all the ETFs. So could we possibly bottom in here and start breaking out near highs before the halving? Yeah, we have until, May of 28. That's still a long time, over a year plus, right? We got to get to April, May of next year. And we still have a year on top of that. So we got, a long time for this thing to bottom and start reversing, making you feel better. But ultimately, I just buy, hold. I don't buy and hold anymore. In crypto, I do. I buy and hold. Every 4 years, I sell, I buy, I sell, I buy, I sell. And when are we going to sell next? In 2030. Oh, 2029, excuse me. And then we're going to buy in 2030. And we're going to have the next halving in 32. And then we're going to sell in 33. So, right, 21, 25, 29, 33, 37. Just plot it out. Rinse and repeat. So in closing, be careful. Bitcoin is still going to go to that 50 to 30,000 range. By closing below our support zone, and we made a new low, the probability we get up here and then fall is low. I was looking for this to go a bit deeper, but if this would have held at that 618, then yes, very likely going there. We didn't. So the writing's on the wall, it gets sucked down in here. Now that doesn't mean for scalpers that we're just going to go down every day. Few thousand a day, just keep down in that 50 to 30,000 range. We'll probably get some sort of little three-wave correction. Maybe we get a 618 from the high to the low, get a little 618 type of retracement out of there, and then we push lower. I don't care. All this is irrelevant. I buy low, I sell high. I wait for my time to buy low, and I sell high. Got it? So the fact that this thing rallies a little bit and sells off, or it just keeps plummeting, if it reaches 50,000 tomorrow, I'm buying. Next week hits 40, I'm buying. Week after that dips in the 30s, I'm buying a bunch more. Or this thing rallies and it doesn't get down here until fall, where we're supposed to be. So around that September, October, this line right there, that's where I'm expecting to be at that 50 to 30,000 range. If in any day we hit that time, set an alert to nibble. Gets lower, buy some more, gets lower, buy some more, and then hold it from 2026, fall of 26, or whenever you're buying it, into fall of 29, 3-year investment, and I think you'll be very pleased. Amen? So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.